And if we take our Fibonacci retracement tool from the top of wave 1, I said it was right here, yeah, to the bottom of wave 1, or at least what we perceive the bottom of wave 1 to be, we see that that zone of resistance, right, now resistance, previous support, is actually exactly between the 382 and the 618, right? The 382, what we were saying, is the minimum retracement for all two waves, right? It has to, at the very least, come to the 382, and the 618 is the maximum. And so we see, like, I mean, you can't make this stuff up. This zone of resistance is exactly in the zone, that theoretical zone of a two-wave correction. So it's very likely that our two-wave, or our wave 2 correction, come to this period, this area. So I'm seeing a pump, a small pump to 42K, followed by a dump back down. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 19th, 2022, and Bitcoin is looking like it's in a wave 2 correction. I said that yesterday. The analysis overall has not changed. I'm expecting a small pump before a big dump. All right, let's get into it. But first, please remember to like the video. If you appreciate sound technical analysis, share with others who you think may also benefit from this type of cryptocurrency analysis, and subscribe to the channel. We'd love to have you. Let's get into it. All right, Bitcoin hourly chart. What do I see? As I said yesterday, I do see our leading diagonal right here to start our wave 1 off, right? I see a wave 2 right here. I see a wave 3, 4, and 5, okay? That's my count for this impulse, right? Let's put that in. So let's put in 1, 2, 3, 4, 5. Okay. Once I see 5 waves and I perceive a support, and what's our support? It's our psychological support at 40K, right? We're at 40K, right? A lot of people know that round numbers serve as psychological support and resistance. So 40,000 is one of those numbers. So given that we're at psychological support, I count 5 waves and I spy a reversal pattern. I think that we're going long, at least temporarily, okay? And so how does it work? For those of you subscribed to the channel, you'll know that in Elliott wave theory, our wave 2 goes between, to a minimum of the 382 of the first wave, so a minimum of the 382 Fibonacci extension, or sorry, Fibonacci retracement of the first wave, and a maximum of the 618. Okay, I have a lot of people asking me, hey, Dean, is this a rule? Is this not a rule? Please understand, your trading is based primarily on your interpretation. Keyword, your interpretation of the rules of any system. It doesn't matter if it's Elliott wave, Ichimoku, classical candlesticks, or whatever. It's your interpretation, Anon. And so if you perceive, if you want to do the 1-2-1-2 Elliott wave international, wave 2 can retrace to 100% of wave 1, but no more, knock yourself out. That's within your right to. But I personally have really benefited from the understanding that an impulse is an impulse and a corrective wave is a corrective wave. A corrective wave can go and retrace 100 to 161.8% of your wave A. But an impulsive wave, it has to stay above the 0.618. And if it doesn't, it's not an impulsive wave, right? You can't be half pregnant. That's how I see it. That has yielded a lot of clarity to me, and Elliott wave theory gets a bad rap because, a lot of analysts have like 1,000 different scenarios. They'll say, okay, I have this count and I have that count and that's another count and another count. And it's great to have a lot of different scenarios to keep things open. But at the end of the day, you want to make a damn decision because you have to trade something, right? So you have to pick one that's more favorable or most favorable. Anyway, that's my little rant for the day. Thank you for coming. So I think that this wave 2 correction, one is going to go and retest this this support level, right? Because we broke support, we have to retest it, right? That's a fundamental rule in charting and trading. You break strong support, you retest it. That's number one. And that strong support level was formed from this 3-day accumulation. And if we take our Fibonacci retracement tool from the top of wave 1, I said it was right here, yeah, to the bottom of wave 1, or at least what we perceive the bottom of wave 1 to be, we see that zone of resistance, right? Now resistance, previous support, is actually exactly between the 382 and the 618, right? The 382, what we were saying is the minimum retracement for all 2 waves, right? It has to, at the very least, come to the 382, and the 618 is the maximum. And so we see, you can't make this stuff up. This zone of resistance is exactly in the zone, that theoretical zone of a 2-wave correction. So it's very likely that our 2-wave or our wave 2 correction come to this period, this area. So I'm seeing a small pump to 42K, followed by a dump back down. Okay, that's what I'm seeing. All of this stuff takes time. I said this yesterday. This is a daily show. However, we don't always get moves intraday, right? Like I said that yesterday, and we spent all of yesterday just going sideways pretty much in a reversal pattern. We can get into that in a second. I can get into the details of a reversal pattern, or the reversal pattern, this particular reversal pattern, but all reversal patterns are essentially the same. There is a schematic or a pattern that is very useful to recognize, and we'll go over that once more. I go over that all the time on this channel. Very important. And they're not super easy to track because they're corrective waves. And this is one of the hardest things to do in Elliott wave theory. Track corrective waves, right? Everybody can count 5 waves. Everybody, even the 1212 people, Elliott Wave International, no disrespect. I do not mean that derisively. I'm just saying, giving an example. Even if you think a wave 2 can retrace to 100% of wave 1, you can count 5 waves, right? You may have a million different 5-wave counts, but you can still count 5 waves. Even in that case, right, it's simple enough, right? But what separates, I think, the true Elliott wave technicians and the serious technicians are those who have spent time poring over the corrective wave sequences, like, how and when you get ABC corrections, like measuring sort of corrective wave sequences. And remember that price is typically in corrective sequence. It is seldom in impulse. So those impulses that we see, 5 waves, woo, everybody cheers, you get a lot of price action, big moves up, big moves down. That is something that you seldom get. That's maybe 10 to 15% of all the price action. Most of the price action sideways and corrective and messy. So it behooves you, if you're a serious chartist, serious trader, to figure that out. You have to make some sense of the chop to be serious, even if you don't trade it. You have to know how to identify it. You have to know it can't be so foreign to you that you're like, I'm not touching it, right? Then I don't know how successful you can be. You know, you don't have to trade it, but you have to at least be able to identify it, right? And Elliott wave theory gives you the tools to do so. All right. If you're getting value from this, please like the video. Share it with others who you think may also find value from, insights into Elliott wave theory from a professional Elliott wave trader, right? I pay my mortgage, my rent, or I don't have rent, mortgage, groceries, and whatever else, my kids' clothes, with my trades and with my charting and with my risk management and my skills and my experience. And subscribe to the channel if you're not already subscribed, right? And yeah, let's continue. So how cool is that? Right in that zone, minimum 382, maximum 618. Okay, so I'm personally in a scalp long position, right? And that's that's okay. It's a decent 5% gain, right, from here. Let's say you go to the 0.5, that's 5. Let's say you go all the way to the 618, that's 7%. So we can expect a 4.5 to 7% Bitcoin pump, okay? And why can we expect that? Again, we have strong psychological support at 40K. We have 5 waves that I'm counting in this impulse, in this wave 1 impulse, okay? And we have this reversal pattern. Let's zoom into that reversal pattern. That's my trifecta. If I'm longing or shorting, I need those 3 aspects, okay? That is basically my trade strategy, but easier said than done. It requires skills to be able to identify each and every single one of those aspects, okay? Let's zoom into the 15-minute time frame, okay? And let's look at said reversal pattern. What is a reversal pattern? I say this every day on the channel. If you're subscribed, you'll know this. It is a collection of 3 corrections, okay? It's a collection of 3 corrections, right? Say that 3 times fast. You have an A wave, which is your initial break of structure. That A wave typically meets wave 4 of the previous trend, okay? So that, to me, is our A wave. You have a B wave, which typically retraces beyond the origination point of the A wave, okay? And that's basically the counter to the A wave. So if wave A breaks the trend, we're in a downtrend, it goes up, meets wave 4 of the previous trend. Wave B, it pretty much takes you down again, okay? Now, after that, you don't have a C wave. A C wave in most corrections is a pure impulse, okay? You have what's called, merci, my son. He's very loud sometimes. So you have what I call a C section, okay? And some people will say, hey, I've never seen this in any Elliott wave book. I've never seen this. Dude, you're not going to learn how to trade in a book. You can start to learn how to trade in a book. But even whatever book you read, however good it is, you have to pore over the charts. You have to gain your own experience and figure this shit out on your own. I haven't seen it in a book, and I'm not looking for it in a book. I don't care to look for it in a book. It would be cool to see another person's perspective in a book. And I've actually never, ever heard anybody talk about this. I've heard Ichimoku people talk about 3-point reversals or something like that, which is kind of similar, I guess. But I've never heard Elliotticians talk about this reversal pattern. They may have. I'm not saying they haven't, but this is just my thing that I've gained over thousands and thousands and thousands of hours poring over charts and trading them. This is what I've perceived, and it's consistent with, the wave principle. They're just a bunch of flat corrections. That's it. It's nothing fancy. And then, okay, sorry. I was at the C section. I was saying it's not a C wave, but a C section. Here's the C section I perceive. So why do I call it a C section? Because it has a pivot. Okay, and is this even the pivot? No, this isn't the pivot. I thought that was a pivot yesterday, but this is my A, this is my B, here's my pivot. So here's my small a, small b. So I do anticipate a fully impulsive 5-wave sequence to the upside very soon, okay? I thought we were going to get it here because I read this as the pivot, this little part as the pivot, but alas, that was incorrect. One of the things that is incumbent on any successful trader is patience, right? You need to be patient. And so I was waiting for the fully impulsive move yesterday, all of yesterday. I'm like, ooh, we're getting it. And this morning I saw that. Okay, this is the pivot, right? And I was wrong. I read that incorrectly, but the pattern remains. And here's the general schematic if you can't make heads or tails of what I'm showing on the charts. It's one flat correction, A wave, one flat correction, B wave, typically a flat correction. It can be a zigzag, and then a small pivot into fully impulsive price action. That fully impulsive price action obviously comes in 5 wave, and that's what I'm seeing. So I call this the C section, not the C wave, because this is technically the C wave, fully impulsive. But all of this together, right, is what I call the C section. Hope that makes sense. I'm going to keep repeating this. And this is pretty much my edge, okay? If you look at trading and you think of people having an edge in the market, right? People being able to identify. Again, I have never heard anybody talk about this, but I don't care to give it up. If you guys can make money with this, by all means. But again, even if I tell you exactly what I do, it's hard for you to do it because execution, risk management and all that stuff, that's probably 90% of all this stuff. Being able to read is great, but do you know exactly how I laddered into my scalp long? Yeah. Do you know the risk management I use? Do you know where I put my stops? If I put any stops whatsoever, like all that stuff is probably more important than your read, right? So if you guys appreciate trading insights, right, from a professional trader, somebody who's consistently profitable and uses this to make a living, like the video, share with others, and subscribe to the channel if you're not already subscribed. So like I said, I'm expecting a 2-wave correction up to the 42K region, followed by a rejection. And if we measure, let's say a 2-wave ends about here. Let's take our trend-based fib extension tool. Let's measure the length of wave 1, retracement, likely retracement of wave 2, right, in the middle of this resistance right here, which beautifully falls between our 382 and 618. And now let's track and see where wave 3 can end up. And lo and behold, wave 3 is almost exactly, let's say it takes a little longer, right? Almost exactly. Let's say it takes this long. Boom. Right. Wave 3 is almost exactly projected to hit the 1618. And what do we know about wave 3 extensions of in Elliott wave theory? Wave 3 typically extends to the 1618 to the 2 Fibonacci extension of wave 1. Okay, it can extend to it has to extend to a minimum of wave 1, but it typically extends on the balance of probability to between 1618 and 2. So I'm expecting a dump quite specifically to about the 35.8 level, $35,800 minimum, okay, judging by this. And there's confluence here. So I'm expecting a 15, when I say big dump, more specifically, at least a 15 to 18% dump, okay? And what is this line? What is this line? For those of you who are not subscribed, this is our 86-day downtrend. Let's zoom out really quickly and show that, okay? Let's go on the daily, and we see I'm in log. Very important. You have to be in log for this to be accurate, or else it isn't, okay? Let's get off of log for a second. Look what happens to that downtrend. Got to be in log. Why are we in log? It's because you're trying to track prices all the way from 69K down to 33K, okay? That requires a logarithmic scale to fit all on one page. So on the log chart, you see that this wave 3 would touch just basically would touch this descending support line, okay? Remember that on the way down, in the 86 days of downward price action, this was resistance, right? We flipped above it with this A wave. Now it becomes support. And what happens every single time you break support, just like I said for our little for our little zone of resistance now that we broke as support, right, between 382 and 618. You have to retest it. So we broke this 80-60 resistance. We were just coming to retest it. We're going to retest it on wave 3. And then subsequent to that, I expect a wave 4 and then another drop, wave 5. Okay, so this is what I'm seeing. That's my analysis. With every candle that prints, we can refine our analysis, right? The first few days of this downtrend, we put in these counts, right? And they were a little sloppy. Maybe wave 1 was only over here, right? We had wave 1 short right there, and wave 2 come somewhere else. But every time you get more price action, you go in. I like to refine my reads, refine my chart, and get even more accurate. So that's why I can give more accurate projections, more probabilistic targets for wave 3 and all that stuff. So if you like that, like the video, share with others, subscribe if you're not subscribed, and have a great weekend. I'll see you guys tomorrow. Bye.